Good morning, folks. This is Naeem Azam, Chief Market Analyst at Trade, and welcome to our daily technical analysis video. What a wonderful day today it is, because gold prices bounced off their support zone, which we mentioned in our previous videos. So we'll have a lot more conversation on that. Before we do anything else, it is important for me to go through this disclaimer and risk warnings. Anything which will be discussed cannot be perceived as an advice. The full disclaimer is right in front of you. Now, folks, there are a number of things that we really need to pay close attention to. Firstly, gold prices bounced off these particular price levels, which we mentioned in our previous videos, because this is an important area of support. And more importantly, right, this area where the price actually bounced initially was also mentioned in our analysis before that as well. So now the price formed a very nice double bottom, and it moved substantially to the upside in comparison to that one, because usually how you would trade the double bottom would be you would just put your stop losses right below this support line, and then the moment price moves in your favor by the same risk amount, you will move your risk back to your break even point. So meaning just from moving your risk from 667 to 1690. So now the price is already trading at 1729. It is pretty much the same, but slightly bit more than what you were initially risking in. So now your price should be where your entry point, where your entry point was, or where your entry point is, so that you have no downside risk left. And more importantly, again, just pointing out those important sort of technical levels, because when the price went down to this particular support zone, the RSI also dropped to the oversold area, because we do know that 30 is considered as an oversold area, and this is the area where when RSI drops to 30, we are expecting the price to move to the upside. Now, what is the most important thing in terms of our fundamentals today? Well, firstly, at 13:30, meaning 1:30 UK time, we are going to get the US non-farm payroll data. Now, you may be wondering, Naeem, today is a Good Friday. Markets are closed. Markets should be closed. Well, yes, but we still need to keep in mind that we are going to get the US non-farm payroll number, and that is something we all gotta keep an eye on, because prices are likely to move to the upside today when that number will really come in. So we really got to keep a very, very close eye on the price action, because at 1:30 UK time, as I've explained, we are going to get the US non-farm payroll number, and that number is going to have a significant impact on gold prices. So at 1:30 we could see a massive move to the upside or to the downside depending on the number. Now, of course, the expectations are for a strong number. If the number can match or beat that forecast, we are likely to see gold prices perhaps moving to the downside. But any miss, if the number comes slightly lower or significantly lower, then we could see this gold price even moving to the upside much more stronger than what the investors are anticipating right now. So that is on the fundamental side what we got to keep an eye on. But on the technical side, and coming back to the technical side, what we got to make sure and that we got to keep an eye on really in relation to that is that where the price is trading in relation to its moving averages. This is your 50, this is your 100, and then your 200 is simple moving average. Now, of course, the price has formed that double bottom, a reversal pattern, which confirms that the prices are likely to move to the upside, which they did. But we also need the price to break above the 50-day simple moving average. Now, the signal for this one is going to come from the 4-hour time frame, because the moment we go into 4-hour time frame, we want the price to break above the 50, which it did earlier today. And we also want the price to break above the 100, which it did earlier today. Now the only obstacle which is left is your 200-day simple moving average. And the moment price moves above these two, above the 200-day simple moving average, we are going to get further signal in terms of a price action that now that resistance on the daily time frame, which is right over here, is likely to be broken and prices are going to move to the upside. Now, for this particular signal, what we really got to keep an eye on is to keep an eye on the 30-minute time frame, because on the 30-minute time frame, the price looks enormously bullish. How so? Because the 50 is trading above the 200, but the 100 is below the 200. So we want this 100 to break above the 200-day simple moving average and 50 to remain above that. But more importantly, as long as the price stays above the 50-day simple moving average, we have not much to worry about in terms of our prices. But one thing that I do want you guys to be mindful of is the divergence, which is the price is making high and a higher high, but the RSI is showing that momentum is not there. So we could potentially be seeing a trap in the market, and that means the moment price gets into something around here, we could see a massive sort of a sell-off and the price could reverse. And if it does, the chances are it will not stop here. It will break this price and then move to the downside. All right, we will continue to watch this. Just very quickly on a Bitcoin, to touch on that, we did a technical analysis yesterday on Bitcoin. Of course, Ethereum is trading near 2000 price level, which is very, very beautiful. I'm holding the target of 5000 on that. And with respect to Ethereum, today the high is 59,994, which is very, very beautiful because it is above the high of this one, which we talked about, that 59,792, and above the high of this particular candle, which is 59,983, and then this one is 994. So we have gone above the highs of these candles. Now it is very much given that this price action is going to break to the upside, and on the 4-hour time frame, that shoulder that we were talking about, the reverse pattern, which is one over here, one over here, and one over here, is no longer really going to play out. In fact, we're going to pay attention to another reverse and head and shoulder pattern, which is shoulder being over here, head being over here, and then another shoulder being here. And within that, we have another pattern, which is shoulder over here, head over here, and then shoulder forming. So we have a lot of bullish patterns forming within the price level, which are pushing the prices to the upside. So we're going to keep an eye on all of these ones. All right, that's all for now. See you guys next time.